Hello, Kaitio Radio, YouTube, and Facebook Online. This is Charles Sugrim from OGGN, um, Oil Talk with OGGN Guyana. We want to thank you for joining us as usual. For you on radio, we are so glad and pleased that you're here with us. And for those of you who are on YouTube and Facebook, give us a thumbs up if you like the program. And because it's very informative, OGGN is a 501c3 organization here in the United States. So we are only for information purpose. We might have our own political belief, we might have our religious belief. That has nothing to do with OGGN. We just want to disseminate information to Guyanese on the oil sector because it's OGGN Guyana, Oil and Gas Guyana. So welcome again today to another live program on Kaito Radio 99.1, 99.5 FM. Please call your friends and family. Let them know that All Talk with OGGN Guyana is on the air. And we would like to get your feedback. Send us a note on, if you have a question, send us a note on YouTube or on Facebook, and we will try to answer those questions for you. Also, we want to encourage you to be on the guard, as Mr. Ram who's my guest again today. Last week we had Mr. Christopher Ram, attorney at law and accountant, and also particularly important, he has also a master's degree in oil and gas with a distinction. Mr. Ram started his column again in Starbrook News. Every man, woman, and child in Guyana must become oil-minded. I encourage you guys, everyone, to read those articles. It is very informative. And the first article he spoke of, we'll discuss that later today a little on this program. So again, welcome. And Mr. Ram, welcome to the program again today.
Thank you very much. I hope there's the last you're going to say about my qualification.
It is important, Mr. Ram, because you are absolutely qualified to speak on this subject that we are on. Mr. Ram, we want to continue a little more on the Exxon 214 million audit debacle. And as you know, when we spoke last week, we didn't touch on it, but I would like us to touch on it today. And based on what I see, Mr. Rutledge, who is the country manager, as we know from Exxon, it was very intriguing, Mr. Ram. I know you saw the statement he put out, talking about the audit itself. And I want to read it, if you don't mind, to start our program tonight. The audit says, and I want to read this, Mr. Rutledge says, we did not have any formal agreement from the ministry, and indeed, as the ministry, the minister, and the vice president made clearer, there is the expectation that the GRA is the ultimate authority on that. So just to be clear, I did describe the process to the opposition, but I did not say that we have reached final agreement as authorized by the GRA or the ministry. The last time we spoke, Mr. Ram, we talked about the minister audit, what this audit was about, the cost audit, because there was no revenue, as we mentioned in our first conversation. This is auditing the cost, pre-contract costs, exploration costs, and up to 2016, and even beyond that, before the production agreement. So for our audience, Mr. Ram, we did speak of different audit, but you're saying according to agreement, this is the minister audit, not a regular audit of revenue and expenses. Is that correct, sir?
It is not only correct, it's as clear as I think one can be from a reading of the agreement. In fact, I just happened to be going through the agreement again this afternoon, and this is what it says, Charles. Nothing in this article, this is the article giving the minister the right to audit the accounting records. Nothing in this article shall be construed as limiting the right of any of government or any officer of government pursuant to any statutory power to audit. In other words, they are drawing a distinction between the audit contracted by the minister and the audit contracted by, say, the audit carried out by, say, the Guyana Revenue Authority under the statutory power. This one is a contractual power. The other, the one by the GRA, is a statutory power, and we must not mix up the two. Routledge can try as much as he wants, but he is wrong. He's completely wrong.
And Mr. Ram, again, our audience, most of our audience, I will have to make an assumption here, they're not accounting-minded people. For those of our audience on Facebook, on YouTube, and listening to the radio, accounting is something that they don't care about. So when you're speaking of statutory audit, and I don't want to repeat what we said last week, but you went through it in very detail. A statutory audit, my fellow Guyanese, is that which is required by the Companies Act, for instance, where an auditor like Raman McRae or TSD, whatever the companies in Guyana, they come in and do audit of the company's books of accounts. That is the revenue and the expenses. That's a regular statutory audit. This one, as Mr. Ram clearly stating to us, and Mr. Ram, please correct me if I'm wrong, is that this is an audit that is part of the agreement that the minister is required to undertake.
That's correct. Quite apart and separate.
Totally different.
You know, Charles, let me say this. Those figures that the Guyana Revenue Authority is now insisting on, $214 million. But the GRA also did its own audit, or I would say it had a right to do its own audit. Is the GRA saying they have not come up with anything for the entire period 1999 to 2017 other than what the IHS has come up with? I know the GRA, they have far more talent and capacity, and they would not have to rely on IHS. They would be able to out from their own perspective. And bear in mind, as you said, we don't want to get technical, but when you ask technical questions, you have to answer technically. The Commissioner General, the Income Tax Act, requires that the accounts be prepared in accordance with tax principles. The accounts by the contractors, for purposes of the agreement, are prepared on contractual and accounting principles that are consistent with best practice in the petroleum sector. So there are two very different things. The GRA has one type of, they have a different focus from the minister.
And fellow Guyanese, again, listen to Mr. Ram. I'm telling you, this gentleman is qualified on what he says. You got to listen to him. The GRA, for simplicity, if I can, Mr. Ram, correct me again if I'm wrong, when we are doing books of accounts and we prepare what is called an income statement or a profit and loss statement, whatever you call it, it's really recording the revenue and the expenses, and then we come to something called a net profit. But when we're preparing the accounts for tax purpose, which is what the GRA is really interested in, so for tax purpose, there's some expenses that are deducted in the accounting profit and loss statement that is not recorded in the tax computation, and there's some expenses that is not recorded that is recorded in the tax computation. So it's totally different. So when the minister or the government is saying that GRA is now, as Mr. Routledge just mentioned, that GRA is now taking up the matter, this is baloney. This is total baloney. And I don't know what the government trying to send to the people of Guyana by saying GRA. This is not a GRA audit, as Mr. Ram says. GRA did an audit. Where is that finding that they did? They sent accountants for training, Mr. Ram. We were told. Of course, the oil company bought most of them over, but where is the audit report or the financial report that GRA had actually verified?
Well, I think we treading on technical territory. The GRA has to, the oil companies have to submit tax returns, and with those tax returns, they submit audited financial statements. Let me tell you, the audited financial statements are not prepared as the agreement might require them. So let's move off at this point, please, Mr. Moderator. We can all agree that the tax audit is very separate from the contractor's audit or the minister's audit of the contractor's financial statements.
Okay, and I think that says it all, Mr. Ram. Thank you so much, and I think we will move on. The last time we spoke, you had mentioned that the audit statement or the expenses or the books of accounts of Exxon were purged. Can you explain to our audience, when you say purge, was it deleted? Was it destroyed from the record? What do you interpret? What is purging in accounting field?
Well, I did not use the word purge. I'm not sure what I did. I quoted from the IHS audit.
Yes, you did. You did. Yeah, you didn't say that. The audit said that, yes.
In which the oil company told the auditors that, look, in accordance with their document retention policy, they no longer had the accounting records up to 2004. So in other words, because you can, now of course with computers it's not that difficult, but to keep all those records. And remember, in 2004, there was a force majeure. There was hardly any active branch or anything like that. And the document retention policy of the parent company, Exxon, probably suggested, well, you don't need to have those records anymore. You can pass them on, get rid of them. And you would not have been violating the agreement because the agreement says the minister has 2 years. The minister, and this comes back to the GRA, the minister has 2 years and 2 years only from the end of the year to call for an audit. So the oil company in the 3rd year, in the 4th year, could say, look, I passed my audit time, they're gone. On the other hand, the Commissioner General can go back more than 7 years. He can go back 7 years, and in the case of fraud, without limitation. So again, you see the difference between the minister audit and the GRA audit. But I don't know, these people are not going to understand or accept.
Well, we're speaking to an audience, and I think Guyanese, and again, fellow Guyanese, as Mr. Ram write up in Starbuck News, every man, woman, and child in Guyana must become oil-minded. This is important. It's like when your street is being built by a contractor. If you see the bill of quantity and you know how to read a bill of quantity, you will know exactly what material to go on the road. So you'll not be shortchanged. Similarly, if you know the oil sector, what goes into it, you don't have to know everything, but you need to understand must be oil-minded. And thank you, Mr. Ram, for those articles. And much more is to come. I will discuss one of them today as well. Mr. Ram, the last time again, I just want to recap. It was 214 million that is disputed. That IHS Market said that it's not cost that should be charged against the government of Guyana. What percentage of that cost is of the overall total that was audited? I know we come up with some different numbers. Was 460 plus? You think about 200 or 300 million more?
That's a very different figure, that 460. Let's not confuse it. The 460 was up to December 31, 2015. If you're asking for a percentage, I think that was about 12% of the overall expenses up to the end of 2017. Yes, I believe
it's about 800,000 maybe in total cost.
If that's 12%, then you're looking.
It's going to be more than that, because it's like because 700,000 will be like 30%.
Yeah.
So it's a substantial. So there is much more cost that was added to that 460.
And believe me, again, if you read the IHS report, the contractors admitted that the cost bank was overstated by expenses that ought not to have been there. And I believe the subsequent audit discovered that they've removed some of those expenses. We don't know how, we don't know precisely the amount. That audit report has not been made public. So we can't, I would not want to discuss it other than what is stated in the newspaper.
Okay. Again, ladies and gentlemen, you're listening to Oil Talk with OGN Guyana on Kaito Radio 99.1, 99.5 FM, and also on YouTube and Facebook. Give us a thumbs up if you like the program, so the algorithm can spread even more as more people have access to the program. Mr. Ram, we keep talking about it 2 years, which is in the agreement. That is, this contract was signed. 2-year timeline to complete an audit. If the audit is not completed in 2 years, does the contractor have the right to say, well, sorry, time has elapsed, you're not going to audit it?
Let's not get it wrong. The 2 years is not to complete the audit. The 2 years is to start the audit.
When did we start the first audit? That, in your view, did you know? Do you know?
I thought we started it more than a decade later.
So once we started, there is no completion date in the agreement.
No, because an audit process is determined by the speed and of the flow of information requested by the auditor and provided by the auditee, the company, the complexity of the audit, the number of issues that arise during the course of the audit, the speed with which the auditor raises queries and how quickly they're responded to by the client company. So there's lots of things. No, again, if I may read, the minister shall have the right to audit upon 90 days written notice at his sole costs and expenses, accounts and records of the contractor maintained hereunder with respect to each calendar year within 2 years from the end of each such year. So he must start it within 2 years.
Of the year that you want to audit?
Yes.
Okay. So in other words, Guyanese, again, I don't want to make sure we understand what he's saying. So if we are doing 2020 audit, we have until the end of 2022 for the minister to request the audit. In 2023, you cannot now request the audit for 2020. But if you start it, as Mr. Ram said, because of the complexity of audit, it can go on for a long time, like as we do have now. Mr. Ram, in your knowledge, how many audits are in the pipeline or past due?
Well, what happened is that IHS was contracted to do 18 years at one time, from 1999 to 2017. So
okay.
then Haynes and Ramdial, as a consortium, they were contracted to do the audit from 2018 to 2020. So that's 3 years.
So for 2021 and 22, there's no requested audit as yet.
That's correct.
But 2021, to request 2021, you have to do it by the end of this year.
That's correct.
Okay. Were you in the first, that 2018 2020 audit? Were you part of that initially and then you pulled out?
Yes, I was, and I did pull out. That's correct.
Okay. And I want to bring this again. The last time we didn't quite get the answer to the question, and I want your professional opinion. I know if we look at oil producing companies like Saudi Arabia, they've been there for many, many years, even Trinidad, you know, all the countries that are doing very well. Do you think Guyanese, we should begin the process of training a substantial amount of Guyanese in auditing, in engineering, in all the different fields that we would require to ensure that we get the best deal in our new sector?
Well, of course. If you don't, then you practically have to employ almost everybody who would be foreigners. So we Guyanese will not be able to share in the bounty or in the proceeds of oil. So it makes sense, it's common sense, that we have as many people as possible, and that at some stage we all the people engaged in the oil sector should be Guyanese. Maybe one or two to look after the contractor's interest, but why not? And that's the whole idea of local content as well.
And I'm glad you bring up that. And we talk about audit and you know, some of the audit to be done. And I want to bring into this question that OGGN Guyana has been pushing, and they made a recommendation that will save Guyana hundreds of millions of dollars, US dollars, in audit fees. And I know you're an auditor, and fees can be very substantial. Of course, there's a cost benefit that the company used to engage their auditors. But OGGN has suggested what is called a gross split model, where Guyana takes 55 barrels out of every 100. Would that reduce the need for extensive audit to be completed on realistic time frame, in your view?
If you have a gross percentage, generally you do not need to bother with cost recovery and audits and all of those things. Because, look, you're taking it off the top regardless of what the expenses are. I think Indonesia is one country that has such a model. The oil companies don't like it because it does mean that the risk of rising costs, you know, you in the oil sector, you talk about the cost of production measured by cost per barrel. So if the cost per barrel goes up, the profit will obviously come down. So the oil companies don't particularly like it. What I don't understand is why host states don't push it much more. in one of my, what have I done now, 110 columns, or yeah, 110
Yeah,
columns.
109 is done, yeah.
And I've quoted, I've said that, look, we should go to, because we generally have problems with the audit, we don't have sufficient capacity. We discovered oil in 2015, and yet we're struggling to find auditors, competent auditors, 8 years after. Go to gross percentage.
And that will save Guyana lots and lots of money as well. And that will also bring cost efficiency because you know, and all Guyanese know, for you listening on radio, on YouTube, on Facebook, the price that the cost for a ticket that Exxon was charging to cost recovery. And this was alarming when I heard that from Miami to Trinidad was about $200 or $300 per ticket. But from Miami to Guyana was over $2,000 per ticket. So the airline, whatever it, and I don't want to speculate in cahoot with the oil company, because it was cost recovery. They're recovering every penny of those costs. So if we were to take the upfront, the gross split model, we don't let them decide how much they will pay for a ticket or not. And I think that will also help them reduce their costs because
That's
they will
correct.
become more cost efficient.
That's correct. In the present model, there is no incentive to the oil companies to reduce cost, other than, well, okay, they share 50-50. But the greater incentive, if they bear all the risk of the cost reduction or cost increases, they will certainly be encouraged and motivated to reduce costs.
Without doubt. Yeah. Mr. Ram, you I want to ask you this question in this respect, that ExxonMobil, as you know, has now also bid for the new track that the government was offering. And I read in one newspaper, Mr. Rutledge says, according to this, I quote from him. He says, Exxon confliction with the PSA has little to do with the fiscal regime. In fact, for a country to try to increase its stake after a basin has been de-risked, isn't this Stabroek Block at this point de-risked?
Absolutely. Absolutely. It's de-risked since 2016.
So what is preventing our government from, and I want to bring in this now because we hear a lot of this, you know, when they were talking about having no ring fencing, everyone seemed to have a view on it. And my good friend, who's an accountant, Mr. Harry Raj, he wrote a good article, but he only spoke of what the disadvantage will be of ring fencing. And I see the vice president, and I want to quote him, Mr. Ram. This is what the vice president says. And when the vice president speaks, you have to listen because he knows what he's talking about. He said, they sold us out to the foreigners. He's talking about a coalition. The oil companies, every time there is a find out there, our people should be sad because nothing comes our way. We're going to renegotiate those contracts because that's not what we had in mind. That is what the vice president said as opposition leader. He added, when we were in the early days, we were coaxing the people, that is Exxon, to go along. The coalition came into office, 3 billion barrels of proven reserve, and they gave up zero royalty, no taxes, no ring fencing. After the PP won the election in 2020, that reserve has gone up to 11 billion. Yet we are giving production license to operate the other wells with no ring fencing. So my first question, Mr. Ram, please, for our audience sake, tell us what ring fencing is all about.
Ring fencing generally means you can't use the revenue from a production area to go spending on an exploration arrangement. In other words, you're producing under Lisa 1 and you want to go and look at another area of the same Stabroek block, but another area. And you take the money from that you're making on like Lisa 1 and you use it to go exploration. So you say no. Ring fencing says you cannot do that. You have to account, and as accountants we do that. That's on the accrual basis. You can only charge expense to relevant revenue. So that's what ring fencing is. When we allow expenditure and to say that we're not going to have ring fencing, then we're reducing the amount of money that we will get as a country. But Charles, I want to make this point about ring fencing. And I think was an article I did. It's on the website anyway. It was captioned why ring fencing matters and why it does not. The minister has the power in respect of every production license to set conditions. So he can say, look, I'll give you permission to produce in Block A, but you can't take the money or the revenue from Block A to go and look for oil in Block C or D or E. It's as simple as, so he does have the power. With due respect to Mr. Lal, he's been singing that, but I've said it does not matter. All the minister has to do is put it as a condition, and the law allows him to set the conditions. Now, if he sets that condition and the oil company say, I'm not going with it, the minister say, okay, thank you very much. Give me back that land, relinquish that block, and I'll go with somebody else. And because it sounds like because of this de-risking, people will go for areas within which oil has been found and is being produced. So ring fencing matters and it does not matter. If only we use the provisions allowed under the law.
And not only that, Mr. Ram, but you mentioned it last time, there is also time value for money.
Yes.
And what we can receive today, it will not have the same worth, receive it 10, 15 years from now. And I'm surprised that the vice president, such a brilliant guy, he don't seem to understand that $1 today is worth much more than $1 tomorrow. And if we're going to use the oil revenue today, we can do much more with that revenue than we will do it in 10, 15 years from now.
That's one. But secondly, as you were speaking, let's say we made $500 in that block from a production license, and we take $100 and put it somewhere else, export somewhere else. You're not even sure you're getting back that $100. You might very well get zilch. So you're saying you're going to get an only time value. No, it's not only time value. You risk losing entirely that 100.
And in addition to that, Mr. Ram, the opposition called on Mr. Jagdeo to prove ring fencing could hamper future revenues. I think what the vice president failed to take into consideration, in my view, is that what if the demand for oil in the next 10 years went down dramatically And we know economics, demand and supply. If demand goes down and there's still supply, the price goes down. So what revenue is he talking about in future years if the price goes down? And with all this talk of global warming and going to renewable energy and so on, it's more likely than not that in the next 10, 15 years, the demand for fossil fuel will be dramatically reduced. Hence, the price also will probably go down. How are we going to recover the cost then when the cost might even be higher? So the cost is going up, revenue is coming down. How are we going to get more?
Well, but you see, I think that's part of the thinking of the vice president. He's saying, look, let me encourage further exploration, even if we have to concede on some ring fencing. I don't say I agree with him, but I'm saying that may be his thinking. Because if you start exploring, the chances, if it's there and you explore, you will find it, you will start producing it, you will get money from it. If you don't explore it, but it's there, you will never get it anyway. So you're taking a chance, you're gambling with the money that you have received from a productive field, and you're putting it to a field that you don't know whether or not it will produce anything. The problem is the oil company is making the decision for the government because half of that money belongs to the people of Guyana. But because we say we're not putting any conditions and we're not putting any ring fencing, then the oil company is free. And in any case, we're giving more production and more prospecting licenses.
In last year, Mr. Ram, the oil company's revenue of 9.8 billion US was generated in 2022. Of that, the oil companies got 7.4 billion. How much, in your view, went to cost recovery and how much went for operating expense?
Well, I don't think it is true, Charles, to say of the 9.7 went to the oil companies. You have to understand the structure of the agreement. You have cost oil, you have production, and therefore you have revenue. Then you have cost oil, which is deducted from revenue, and thereafter you share, well, 50-50. So I wouldn't say the oil companies, they didn't get that money. Now, that is supposed to have been, much of it is supposed to have been utilized in expenses in the generation of the income.
Yeah, that's what I'm saying, Mr. Ram. We're saying the same thing. What I'm saying is that to produce the oil, there is operating expense that is deducted first. And I'm asking, 75% was cost oil of the 100%. The other 25% split half and half. We got 12 and a half, they got 12 and a half, and then we got 2% royalty as profits. Right. So 75% was cost oil. 75% of 9.8 billion is 7.4 billion. Right. And my question to you, if you know, I don't know if you know what the operating expense is, which is the cost to produce the oil as day-to-day operation, how much of that was taken out from the 7.4, and how much of that 7.4 went to recovery costs that they spend on exploration and on the FESCO, the oil producing platform and so on?
I don't have the figures in front of me, but you would have to accept, and whatever the auditors, subject to the auditors, you would have to accept that 75% was expended in earning the income, or would have been in part money brought forward from preceding period. Because remember, you're only entitled to claim up to 75% in any 1 year. There's a cap in the amount of expenditure, cap in cost soil as it's called, of 75%. It does not mean every year going to be 75%. One hopes, I don't know whether one is being very realistic, that at some point when we've done all the exploration, that we're just going to have productive production fields, and the with cost of production running at about 30 to 35%, then we'll have 60 something percent of the oil revenue being distributed. Now you can say I'm being naive, because we keep spending, and I think the danger we have, Charles, is that by time we will have reduced substantially the exploration activities, the danger that you're talking about, where fossil fuel, which includes oil, the demand will have dropped significantly because much of it will have been replaced, a lot of it will have been replaced by renewable sources of energy, wind, solar, thermal, nuclear. All of those things will happen. And once those things happen, then the demand for oil will go down. And the supply and demand curve says that if the demand goes down and supply remains the same, then the price will go down.
And that is what we're saying. And Mr. Ram, Mr. Tom Sanzillo, I'm sure you met him, the director of the Institute of Energy Economics and Financial Analysts. He said, and I'm quoting him now, they estimate that Guyana should receive upward of $6 billion annually by 2028 or sooner. However, the organizers believe that due to all the new costs, Guyana will be shortchanged until the 2030s, if not longer. So that 75% we're talking about is likely to be there until the middle or late 30s. Then what, and if the demand for oil in the next 10, 15 years dramatically reduce, then as you said, simple economics with the supply being hopefully maybe the same, the price of oil will come down, hence the cost will be higher as a percentage of total revenue. So what are we talking about? We're in the worst boat. The sad news is that Guyana only found oil a few years ago. We're 50 years too late, but we're also getting the raw end of the stick.
Mm-hmm. And the question?
The question is, what should the people of Guyana do to force our government to ensure that this agreement is renegotiated? The agreement, Mr. Ram, as you know, gives room for renegotiation. You also mentioned, without even renegotiation, the minister has the authority to say, okay, we're going to give you a production license for this new well, but it will be on a different term. Is that something that the people of Guyana need to force our government to get Exxon on the table for it to happen?
Well, you see, we hear lots of talk about sanctity of contract and all of that. I think you Americans have an expression called BS. That's all. It is worth noting that this contract was renegotiated by the PPP in 2012. And then again in 2015. I have made this point, Mr. Sogrim. That 2016 agreement was itself an illegally renegotiated agreement. Let me read for you. This is a Clyde and Company report that was commissioned by Minister Raphael Trotman. The 1999 agreement and the 1999 license were due to expire in June 2018. The contractor consortium had already renewed the 1999 license twice, one in 2012 and once in 2015, being the maximum number of times allowed under the Act, and so a further extension of the 1999 license was not an option. Nobody wants to read this Clyde and Company report. So we have renegotiated, and it is complete nonsense to say, oh, that you cannot renegotiate. We have renegotiated, and this agreement itself is illegal. The court has not ruled it illegal, and I will have to concede that. But read the whole idea of the petroleum framework. You come in, you get a chance, you get an agreement, and then you apply for licenses under the agreement. You get production exploration licenses for a maximum of 10 years and 6 months to mobilize. If you find oil, you get a production license for 20 years, and then you get a 10-year extension. So the entire thing was an illegality. But as Clyde and Company said, and you know, I have said to the government, look, you're scared of the word renegotiation, and I can understand that. But why not have a commission of inquiry into this whole 2016 agreement, using as the basis the Clyde and Company report? And you call in people like Trotman. He said he would like to speak to an independent commission of inquiry. Let him come. Let Greenwich come. Greenwich was one of the chief cooks and bottle washers for the 2016 agreement. He's the one who tried all kinds of tricks with the signing bonus, and went to Parliament, and in one speech he called my name 5 times. Let him tell us how that signing bonus was spent. So this
is it Greenwich or Jordan?
Greenwich.
Okay.
I don't believe Jordan even knew about the bonus, because when I talked about it, read the Kaicho News, Jordan said it was a figment of my imagination.
Yeah.
Even didn't know. Greenwich and his friends knew about the 2016 agreement. They knew about the signing bonus. And all you have to do is read Trotman's book, which I am reviewing in my oil and gas column. So this apart from it's illegality, impropriety, deviousness, the hiding of information, all those things took place. But as I said, Mr. Greenwich named me 5 times in a 5-minute speech he gave in the National Assembly, defending the signing bonus that nobody knew about, that his own partner in the quintet said was a figment of my imagination.
So, Mr. Ram, do you think in your professional judgment that Exxon will want to go to arbitration knowing that if we have competent international lawyers, they could extract a lot of information on that same thing we're talking about? The president seems to be willing to have inquiry into different things. Why not an inquiry into the signing of that contract?
Well, Mr. Sugrim, I have asked for that so many times. So many times. I tired asking for it. So many times. But where are all politicians? Where is civil society? Where all these small parties? You probably were involved with some of them. They're gone quiet. Where did they? You had about 10 parties contesting the 2020 elections. Where are they? They leave GHK Lal and Glenn Lal and a few others to do all the talking. And
but in fairness to them, Mr. Ram, it costs money, and these guys, they're struggling to make ends meet out of an election cycle. But yeah, Mr. Glenn Lal and Mr. GK Lal have been shouting from the rooftop, and Guyanese are not really responding in the way we expect them to respond. So what are we talking about? Is Guyanese so complacent? They have no regard for what is going on in their country?
Well, I don't know. I can't answer for all Guyanese. But you talk about arbitration. So you think, first of all, a lot of these arbitrators were ex-oil people. You know that?
Yeah.
What?
But we'll have international lawyers to zoom in on the agreement, and a lot of things might come out of that agreement.
You zoom in on the agreement. Lots of times, people take sides. But so what we do? We go to the American Arbitration Institute. Is that what you're telling me? We're gonna try Exxon before the American Arbitration Association? Come on, you live in America, but you're that naive about America?
No, but international lawyers, independent international lawyers who will go after this agreement, we might have a lot of things, but an inquiry might bring out all of that anyway, as you mentioned earlier.
Let me tell you, who gonna take it to? It's only the government or Exxon. It's only the parties to the agreement can take it to arbitration.
That is correct. I'm talking on government behalf now. If the government will do that, but will they?
I don't know. I can't answer that. They haven't shown an inclination so far to go that route.
And that's why we're calling on the people of Guyana. And as you said in your article, Mr. Ram, all men, every man, woman, and child in Guyana must become oil-minded. If not, we'll be eating the crumbs on the table for many, 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 many years to come.
Including all them leaders for small parties who have kept their mouths shut and taken positions. They've sold us out. A lot of them have sold us out. So, well, I have no time. I really have no time for small parties. I think I saw a lovely quotation from Trotman's book. He described it. Let me tell you what he said. Let me tell you what we want to tell you. Politics is a whore's game. You heard me? Politics, a whore's game. And he has chosen to play the game.
So he's one of them.
I am not saying, I didn't say it.
Well, you're implying that. Mr. Ram, we got limited time left, but I think I got a whole lot of questions to ask you, but I can't. I know this is a ministerial audit. This is not a traditional, as you said, a statutory audit. Would you think it would be the accountants or the auditors would be more fired up if they were given a percentage of the dollar they can recover for costs that should not be applicable to cost? You think that might be an incentive for the auditors to, and because this is not a statutory audit, this is an audit to zoom in on the cost. Would you support that, a percentage paid to the auditors to go in and dive in the books?
Let me ask you, would you support traffic police getting a commission on the number of tickets they issue? Look, I am a British trained accountant. You're also a British trained accountant, but you're practicing in America. In the English system, contingency fees are frowned upon because then you have an interest. You're no longer just being professional. You do it because you think it's right, but you do it because you think, boy, I gonna get more every $100 I find, every ticket I write, I gonna get more money. I'm not in favor of that.
No, Mr. Ram, but your professional license on the line that, hey, you're not gonna just pull out a expense and say, hey, this is not recoverable, this is not recoverable. You'll have to justify it. But I'm saying it's only a suggestion. I'm not saying it'll happen, but I'm saying if that were to be, like the auditors, listen, we have $10 billion in audit here. You go in there, see what is they're shafting us with, pull that out on your professional judgment, and whatever you save us, it's like the whistleblower. The whistleblower get a percentage of whatever the victim had to pay. So why wouldn't that work in a sector that we know they've been, and you were reporting in the auditor's report that a lot of the costs that they put into the agreement, submitted to us, was not recoverable costs.
The thing is this, Charles, if you're a true professional, regardless of what the fee is, and as you know, many professionals do pro bono work. They do a certain amount of pro bono work as giving back to society. That doesn't mean that they wouldn't act professionally. If you have to appoint an auditor and he's going to be guided by fees, then I think you're starting on the wrong foot.
It's only a suggestion, but again, 1%, 2%, it's really very small amount compared to the volume and the value that they're to audit. And again, it's not to go and get you, it's just to make sure, it's like a forensic audit. You want to go down to the bottom of it to ensure that every penny spent was actually, authentic expenses that is to be recovered. But but you've said your point on that as well. Exxon bid on a new contract, as we said earlier, but Mr. Routledge said they will not sign it in its current form, even though they bid on I'm not sure if they allocate us yet, but he says Exxon proposes bid, but tells government it will not sign new PSA in current form. What are they telling us?
You see, if you have read the Clyde and Company report, and even Trotman's book, if you've read, what's this, Exxon Private Empire by Skoll. Exxon is an international bully. Exxon bullied Noel Denison and his deputy when they went to Texas, to Exxon's campus in Texas. They went for a technical meeting, and Exxon said, we ain't got time to talk about technical meeting, we talking about contract. They are bullies, and Routledge is a bully. He would not have got the job if he didn't subscribe to that bullying mentality and tactic of Exxon. But the records are there. Look, Clyde and Company tells us, you know who wrote the cabinet paper that went to cabinet? The agreement did not go to cabinet, Charles. It's merely a cabinet paper. You know who wrote the cabinet paper? An Exxon staff. And Trotman, when they talk about, oh, Trotman submitted paper. Isn't it? Trotman submitted paper that cabinet, that Exxon wrote. It is in this report. That's what
Mr.
it is.
Two questions before quickly, and then I know we're running out of time. Again, to our audience, you're listening to 99.1, 99.5 FM, Kaito Radio. For those on YouTube and on Facebook, give us a thumbs up. Let us continue this program. It's very informative. You've learned, I'm sure you learned a lot from Mr. Ram is saying. Mr. Ram, is the audit report, do you have a copy of the audit report that was done by HS Market?
I have, but I don't think the report has been officially released, and I have no authority. The person who gave it to me, I cannot, in good conscience and for professional reasons,
release it. Should Starbuck News, the same argument with Starbuck News, they can't publish our Kaito based on the non-public release. Is that correct?
I think that's the correct position. Yes, that's the position.
Okay. And lastly, Mr. Ram, before we close tonight, we know that on the audit report from 2018 to 2020 has been...
Tell you this because this is important. This is Clyde and Company. We understand that on 25th of May 2016, our Independence Day, that is what Trotman and Company subscribed to. Miss Harris, Exxon staff, provided by email the first draft cabinet memorandum to Miss Homer. Homer is the lawyer who worked in the Ministry of Natural Resources. In other words, as I said, the cabinet paper was written by Exxon and not by Guyana.
But that's not illegal, is it? I know it's wrong, it's professionally wrong, but it's not illegal.
It is disgraceful.
It is disgraceful, it is very much so.
On your Independence Day, partner, on your Independence Day, is shame you ain't got. I don't know if you remember that expression from Guyana, Charles.
Yeah. That is, those are politicians. You said, as Mr. Trotman rightly said, politicians are whores, and definitely we have a set of those in Guyana.
No, please don't misunderstand me. Trotman's mother said, politics is a whore's game.
Okay. Okay, so
you like to misquote me. But okay. I think the cabinet paper was written by Miss Harris and sent to Miss Homer. And
that was presented to cabinet. That's the kind of government we have. The coalition was a total disaster.
Hold on. That was 25th of May, 2016. And when was the agreement signed? It was signed 2 days later. 2 days later.
27th of May.
Partner, don't tell me about Routledge. Routledge shouldn't even be in Guyana.
Fellow Guyanese, listen to Mr. Ram, the passionate play of Mr. Ram. Guyanese, you have to wake up. You need to wake up. Read Mr. Ram's column on Stabrook News. Every man, woman, and child in Guyana must become oil-minded. It is important. Mr. Ram, in closing, the new audit for 2018 to 2020, there was a preliminary report coming out that there's a discrepancy of about 100 million. Is that a good thing? Because the audit was of a couple $1 billion, I believe, right?
Well, maybe they learned from maybe Exxon learned from the first experience. And of course, the records were of more recent vintage. So I wouldn't be surprised if the amount of the challenge expenditure or expenditure that could not be supported is a smaller sum. But you know, Charles, I would not want to comment overall on that audit on the report until it has been made public or until I have seen an official copy.
And for the record, you have not seen a copy as yet.
For the record, I have not seen, and you said as yet as though you expect that I will see. I don't know.
You're one of Guyana's top information czar, and people learn a lot from you. And if someone will have that report, it will be Mr. Christopher Ram of Ram and McCrae. Mr. Ram, I want to thank you again for being on the program today. I mean, it's intriguing, and I know you're a very busy man, but please, in the future, we want you to come back on All Talk with OGN Guyana, because there's so much, information is moving so quickly that your input is so important in the discussion of oil and gas Guyana. Anything in closing, Mr. Ram?
Well, I think it would be important that that OGGN, and let me congratulate you all for the work you're doing. We're very few in Guyana. We need support. I think you should try to get your hands on the Clyde and Company report. Let me tell you that I have a copy of the report, but it's missing the critical appendices. I have written to the Commissioner of Information. I've written to the minister, the relevant minister, asking for the annexes, and they are just ignoring us. They're not serious. I don't know why they wouldn't want the Guyanese public to see the story behind the independent investigation into the circumstances leading to the execution of the petroleum agreement dated 27th of June 2016. That's the caption. That's what the report is titled. Why they wouldn't want to.
You'd have thought that the PP government would have used that to tell you all the bad things about what the coalition did, and I think that would have given them the incentive to make it public. So say, hey, this is what these people did. They should never ever go back in office. But they're not doing that. Why? That's a different discussion. Mr. Ram, thank you again so much. Anything else in closing, sir?
Well, I have a lot of respect for Trotman's mother now, yes.
Yeah, may God bless her. And
may she rest in peace. She is no longer with us.
Yeah, I'm sure she is resting in peace. Knowing what she said is absolutely correct. And for those of us who want to dabble in politics, think of that. Mr. Ram, you want to repeat that statement, what she said?
Politics is a whore's game.
Yeah, it is definitely.
I think even whores got more integrity than some politicians.
We will leave it at that. So to our viewers at Kaito Radio on YouTube and on Facebook, we want to thank you so much again for joining us again. Give us a thumbs up if you like the program. It's very informative. We will continue to give you information on the oil and gas sector in Guyana, and we encourage you to send this recording to your friends, to your family, and everyone else, so they can at least get some additional information on what is going on in our beautiful country of Guyana. Thank you again, Mr. Ram, for taking the time off. I know you're a very, very busy man. So thank you so much for being with us this evening, and we look forward to seeing you again.
Thank you, sir.